So what does the future actually hold for Bitcoin? I mean, that's the billion-dollar question, right? Today, we're going to unpack what the experts are forecasting for the rest of this decade, all the way out to 2030. Let's dive right in.
And yeah, right off the bat, you can feel the tension. The road ahead for Bitcoin, it is anything but a straight line. Seriously, the experts are looking at two totally different outcomes. We're talking either a massive surge to heights we've never even dreamed of, or a correction that would be, well, pretty painful. The stakes are just incredibly high.
So you might be asking, what's behind all this uncertainty? Well, here's the thing. Bitcoin doesn't exist in some kind of bubble. Its fate is tied to these massive external forces. I'm talking about huge macro trends, what governments decide to do, and of course, where the big institutional money is flowing. You know, these are the powerful currents we have to get a handle on if we want to even guess where Bitcoin is headed.
All right, let's take that first fork in the road for 2026. This is the boom scenario. This is the path that has analysts thinking Bitcoin could kick off a seriously powerful new bull market. And the price target they're throwing around here? It's kind of staggering. We're talking about a potential move to over $150,000. Let me just repeat that. Over $150,000. I mean, that's more than double its previous all-time high. So the big question is, what on earth could trigger a rally that huge?
Well, a bull run like that wouldn't just happen out of nowhere. It would basically take a perfect storm of four key things. First, you'd need a flood of new money coming in through ETFs, making it super easy for everyday people to invest. Second, you'd need the big players, the institutions, to keep buying and holding. Then you'd need interest rates to start falling, which makes an asset like Bitcoin look way more attractive. And finally, the classic supply and demand squeeze. With not much Bitcoin available to buy on exchanges, all that new demand would just send the price through the roof.
But of course, there's the other path at that 2026 fork. And this is the bust scenario. This is the case for a major and, let's be honest, painful correction, fueled by a whole different set of storm clouds gathering on the horizon. And the price target here? Yeah, it paints a very different picture. In this bearish world, the analysis suggests a potential drop to below $50,000. It just goes to show you how incredibly wide the range of possible outcomes really is.
So what could possibly cause a downturn like this? Well, it's pretty much the exact opposite of the bull case. You've got high interest rates sticking around, making safer investments look a lot better. You've got weak liquidity, meaning less cash floating around to buy things. Then imagine if those big ETFs started seeing money flow out instead of in. That would create huge selling pressure. And last but not least, the big one, the constant threat of tough new regulations from the US or Europe, which could spook the market in a big way.
Okay, so this all leads to a really important question. For years, it felt like Bitcoin's price followed this predictable beat, this rhythm that traders kind of relied on. But now that the market is getting bigger and more mature, can we actually still trust those old patterns?
So that old pattern I'm talking about is the 4-year halving cycle. It's basically a built-in event that cuts the new supply of Bitcoin in half. And historically, this thing has been an almost perfect trigger for massive bull markets. But, and this is a big but, the real question analysts are asking is, does that cycle even matter anymore? With so much institutional cash in the game now and all these new forces, well, it's possible the old rulebook is getting thrown right out the window. Okay, so that's the tug of war for 2026. But what happens if we zoom out even further, say to the end of the decade? What could Bitcoin look like in 2030? Well, analysts are sketching out 3 pretty distinct futures.
And yet the long-term possibilities are just all over the map. In the super bullish scenario, you're looking at a price north of $300,000. That would be driven by truly global adoption and a massive supply squeeze. Then there's a more moderate path, where Bitcoin just matures into a real digital asset class, trading somewhere between, say, $150,000 and $250,000. But you can't ignore the bearish case, which is just as possible. Tough regulations or just a lack of demand could cause the price to go nowhere or even drop.
All right, so after hearing all these wild numbers, from under 50 grand all the way to over 300 grand, what's the takeaway? I mean, what does this actually mean for you? The absolute key here is to see all of this not as a prediction, but as a framework for thinking about what's next.
And this really gets to the heart of it. These forecasts, they aren't promises. They're definitely not guarantees. It's better to think of them like a map. They're tools to get your bearings. They help you understand the landscape, see the potential upsides and the big risks, and just think more clearly about the huge forces that are going to shape Bitcoin's future.
And that really leaves us with the ultimate question for the rest of this decade, doesn't it? Which of these massive forces is going to win the day and define Bitcoin's destiny? Is it going to be macro policy and regulation, or will it be widespread global adoption? That's the real question, and the answer will decide which one of these futures we actually end up living.